Welcome to Let's Talk Global Business, the show in which we look at economic and business trends connecting the world. I'm Sara Murray, Managing Director, International Conference Board, the member-led global think tank that delivers trusted insights for what's ahead. According to the results of our recently published Europe, China and US surveys of CEO confidence, CEOs around the world are cautiously optimistic about the short-term global economic outlook. But underlying that increase in confidence, there are some deep-seated worries and concerns about the future. In this episode, we will be looking specifically at the results from Europe and China. To do that, I'd like to welcome our guests. From Brussels, I'm joined by Dino Panitsas, economist at the European Economy, Strategy and Finance Centre and author of our Europe report. From Beijing, I'm joined by Alfredo Montufar-Helu, leader of the Conference Board's China Centre for Economics and Business. Welcome.
Thank you, Sarah. It's great to be here.
Thank you very much, Sarah.
So, Dino, Alfredo, let me start by asking you both why you think we've seen this uptick in confidence around the world.
Sure. Before I delve into the results, perhaps it would be a good idea just to freshen a little bit, our listeners' memory and explain in very briefly, how we construct this measure, right, Sarah? So typically what we do is we ask CEOs three questions and we ask them to tell us their views about the current economic conditions compared to 6 months ago. They ask them to tell us their views about what they think about the short-term economic outlook and also what they think about the industry conditions in which they operate over the next 6 months. And then what we do is we average those responses, and based on the weighted average, if it is above 50, it means that they are on average more optimistic about current and business economic conditions. And if it is below 50, it means that they are on average more pessimistic. So back into Europe results, what we saw in the latest round of the survey is that the European CEO confidence measure went from a very green, very pessimistic 42 6 months ago to now cautiously optimistic 58. And when we take a look into the subcomponents of the measure, what we see is that what drove this improvement in confidence was basically improved sentiment around both the short-term economic outlook and, of course, also improved sentiment regarding the industry conditions in which CEOs in Europe operate. And of course, it makes some sense, to see why this happens. We have to keep in mind that, now the European economy prospects look a little bit better compared to 6 months ago.
Indeed.
Inflation continues to moderate. Business activity, according to other sentiment indicators, is on a sustained path of recovery. And, with inflation falling, real incomes continue to improve. As a result, private consumption will continue to gain momentum and will revitalize economic activity in the near term. But despite this good news, we also have to be very careful about how to interpret this positive news, because one prominent driver of CEO's confidence was the fact that optimism, what we saw in our survey, was higher mostly about business conditions outside Europe rather than business conditions inside Europe.
Thank you, Dino. And Alfredo, from the China perspective?
Well, we did see a marginal improvement in confidence.
Yeah.
Our measure of CEO confidence for China index moved from 54 the last half in 2023 to 56 this half. So it's very marginal. I agree with Dino. What really drove this improvement are the soft components of expectations for future business conditions and also for the current business conditions and also within their industry, right? But I have to say that when you look at confidence in China, the improvement that we're seeing right now, while it's a positive, it's still way below pre-COVID levels.
Yeah.
So we are seeing some signals that the economy is recovering, but China continues in a protracted economic recovery.
Yeah.
And we're also seeing signals that the government is really now intent on supporting economic growth through supporting measures either on the supply side or the demand side of the economy. So this is obviously having a positive impact on the perceptions of business vis-a-vis the outlook of both how businesses will do and how the economy will do. Having said that, the reality is that the Chinese economy is still facing many challenges and businesses are worried about what comes next.
So really it's better, obviously, in both Europe and China, but it's not great because there's still a number of hurdles. in both regions that really need to be overcome. Yeah.
Definitely. One thing, Sarah, that I would add to all of this is let's not forget about the geopolitical environment. This is really hurting certainty. When you are a company, when you are a multinational, and you are dealing with all of these changes in the market, in the economy, also in the regulations and the policies, what you need is to be able to plan ahead.
Yeah.
What really affects that is the uncertainties.
Well, let's build on that, because if we just look at China-Europe relations, we asked CEOs in Europe about relations with China and vice versa, and there were some really interesting results. According to the survey, 54% of Europe-based CEOs anticipate that the EU-China relationship will worsen over the next 3 years. By contrast, 35% of China-based CEOs say the same. Why the difference in outlook, Alfredo?
Well, I think when you are in China, you are obviously seeing face-to-face the changes that are happening both from a policy, domestic policy, foreign policy, and market perspective. So what we have seen in China right now is a realization from authorities that they really need to do something to alleviate the perceptions overseas about China, right? Now, you might remember some years ago, we were talking about wolf warrior diplomacy. This obviously exacerbated the perceptions that were growing very negative about China because of unfair competition, because of trade restrictions, and all of that background, right? Add to that the fact that ongoing concerns about reciprocity of market access, about unfair competition within that market, all of that combined is really hurting the perception of China. Now, what we have seen recently is a turnaround in how China is looking at the world. We have seen President Xi Jinping coming to Europe, visiting some European leaders. We have seen more European leaders going to China, trying to establish some communication. It's not surprising to me then to see that the percentages of our responses that we received just now for this confidence survey are like that.
Yeah, indeed. And so, Dino, again, as I mentioned, European CEOs are more pessimistic about the relationship. What's your take on that?
Yeah, I think from Europe's perspective, the list of irritants, at least that try to explain why this the EU-China relationship has become much more challenging and complex in recent years is growing. You can think of things like alleged human rights violations. You can think, of course, things like China's increasing support to Russia in its war against the Ukraine, and of course, continuing deteriorating business conditions for Western companies that operate in China. So all these factors to some extent can explain why European business leaders are on average more pessimistic about the future of the EU-China relationship. Now, of course, on top of that, don't forget that lately we have mounting trade disputes over renewables like electrical vehicles. This has increased fears among European business leaders that bilateral relationships will worsen. And to top it off, let's not forget that Europe's efforts to de-risk dependencies from China, like, for example, in the case of critical raw materials, also in an effort to gain more strategic autonomy, this will add more pressure in the relationship between the two regions in the future.
Yeah, indeed. And CEOs in both regions are quite closely aligned on the view that the US-China relationship will have a significant impact on the China-EU relationship. Do you think there's space for the Europe-China business relations to develop independently of the US, Alfredo?
I think that's going to be very hard because we're talking about multinationals, and multinationals have operations in every country around the world, right? So, of course, when you're talking about the most powerful economy in the world, and then the second largest economy in the world, and the fact that they are having tensions right now, plus the fact that this year is a year of presidential elections in the US, the reality is that this bilateral relationship, we've already seen it impacting business.
Yeah.
We've already seen that. Multinationals from Europe in China are being impacted by this crossfire of regulations and policies from China and the US, also from Europe. So they are there operating in China and they're being impacted by this.
Stuck in the middle.
Stuck in the middle, as you say. So this next election is definitely front of mind for them. Every CEO I'm talking to right now is telling me, well, we don't know what's going to happen. How do we do a scenario planning for this?
Well, this is your point. It's hard to plan because there's so much uncertainty.
Absolutely. And remember that we will know the results in November. The new administration that will be elected won't come to govern until several months afterwards.
Yeah.
So right now, companies are really thinking about how to prepare, right? A scenario planning again.
Yeah.
I mean, we are in a world right now increasingly where companies need to do contingency planning, a scenario planning, because we don't know what will happen.
Dino, what's your view?
I totally agree with Alfredo. What we lately actually see is that the US continues to push Europe to toughen up its stance against China, particularly on critical sectors and domains like semiconductors and AI. And I think if we go a few months back, here in Europe we have had some characteristic examples of how European companies had to abide by export controls imposed by the US. Perhaps on microchips that would otherwise end up to China. So all in all, I also agree that this relationship will continue to be, the EU-China relationship, will continue to be influenced to a large degree by this ongoing geopolitical clash with China.
Yeah. Alfredo, it was really interesting that 77% of China CEOs think that China's industrial overcapacity is driving perceptions of unfair competition. What's your take on that?
Well, I have many things to say about industrial overcapacity. But first and foremost, all of the officials that in recent months from Europe and the US, the ones that have visited China, they are carrying with them the message of industrial overcapacity is a thing for us. Now, here's the thing. Industrial overcapacity is not an end by itself.
No.
Right? It is the byproduct of what's happening right now economically in China, which is the real estate sector right now in China is in a downturn. It used to contribute, according to estimates, up to 30% of growth.
Yeah.
Property investment is a big part of that. And it's just down, down, down.
Yeah.
So if you have that and you are the government and you want to support the growth, you have other two areas where you have to invest. Traditionally, at least in China, but also in other countries. It's either infrastructure development or manufacturing.
Yeah.
Now, infrastructure development is, of course, a key area of investment right now, but it takes years to deliver infrastructure projects and therefore years for the ROI to be generated.
Yeah.
If you want right now in the short term to support growth and offset the drop in property investment, you have to invest in manufacturing. So for China, you might come with a message to them and tell them, hey, your overcapacity is causing problems. It carries the potential of hollowing out our strategic industries. China is not looking at it from the perspective of strategic industries or hollowing out your industries. It's more about I need to invest in manufacturing. Yeah. Of course, at the same time, China also has some security priorities right now, which have become increasingly important against the backdrop of these restrictions from the US on technology. And so China right now, if they want to invest, are trying to invest more in semiconductors and in other strategic sectors that they think are going to help them just gain a competitive advantage in technology and in what will define competition in the world in the next decades.
Indeed. So there's a bit of a symbiotic relationship there, right? China needs those export markets. It needs it to grow. But again, that's going to cause a lot more tension, especially, when you look at European competitiveness that's falling. So, that's not something that's going to be solved overnight.
It's not. And the other thing is that the reason why it's so threatening, right, to Europe and to the US is because, first of all, although they might not reach the level of quality of European and US products over the past decades, they have been leapfrogging.
Yeah.
So they present a good enough alternative.
Yeah.
On the other hand, overcapacity, you are seeing a lot of that being exported, right? But most of it stays in the domestic market.
Yeah.
And it's pushing prices down. It's generating deflationary pressures in China. Now, from an economy, deflation is very bad. For each company that has to engage in a price war to try to outcompete someone else and get that spend from a consumer that is downgrading, it's terrible. Profits are tiny for them. They don't want this, right? So it's really going to be hard, because imagine that the stimulus that is being put into manufacturing is generating employment.
Yeah.
Right? Now, the moment you take out that stimulus, without that money that is coming for you to manufacture, how are you going to sustain this employment? How are you going to keep people employed? So it's already it has become a vicious circle where the government is like, well, we do need to continue providing some stimulus there, right? Because otherwise there is a problem.
Yeah. And we need to find other export markets, especially, if certain countries are going to put the barriers up. I also thought that what was quite striking is that 80% of China CEOs think that the China-Russia relationship is the leading cause of the Europe-China relations, but only 36% of European CEOs thought the same. And that's quite a big difference. Dino, how would you explain this? Are European CEOs missing something?
Yeah, frankly, I wouldn't say that CEOs in Europe miss something. In my view, this makes absolute sense that the China-based CEOs are emphatically more concerned about the evolution of the China-Russia relations. And the reason why I'm saying this is because they understand that closer ties with Russia perhaps would lead to an acceleration of Europe's, or if you want, the West as a whole, drift away from China. And alternatively, what we could think of how I would interpret this 81% is perhaps, you could also think of it as China CEOs' more heightened concerns about a much greater unified policy response from Europe, and of course in cooperation with the US, in the event China-Russia relations tighten further in the future.
And again, it goes to your point, Alfredo, that you made earlier. Maybe it's also because China CEOs are on the front line for these tit-for-tat policy measures. So that's also why they're a bit more sensitive to this, because, if they have to suffer sanctions, that's going to hurt them,
Absolutely.
a lot.
Yes. And, some of these companies are looking at the impact of these sanctions in their supply chains, right? Because the companies that participate in their supply chains also supply to other companies, be it in China, be it in other countries, including Russia.
Yeah, indeed. So, Alfredo, you're talking daily to CEOs in China, but also, global CEOs. What do you think that they can do to navigate through this complexity, given the implications that, there are for business?
Well, first of all, there is no question that this is a very challenging, extraordinary time for MNCs. Right? The funny thing is that China, over the past 3 decades, had a very good period of very high, very inclusive growth. This, for businesses, generated an expectation of continued growth, continued profitability, and you grow by being in China. The equation has completely changed. If you want to grow in China, you need to compete for that growth. Sometimes that means that you really need to compete for a market share that a local competitor has, right? So when you are in that situation, and when you are seeing it in China happen, and when you know you need to respond, well, that's something that you need to communicate to your head offices. The problem right now is that because of geopolitical tensions, that is affecting perceptions also at head offices and affecting alignment. Right? So how do you convince a head office that they need to continue prioritizing China as an investment destination when they're seeing a market that is slowing, when they're seeing an economy that is slowing, when they're seeing geopolitical tensions impacting a lot China, right? Because China is very much the target of many or the majority of these restrictions. So alignment is very important. Now, the good thing is that, well, first of all, let's talk about the bad thing. Alignment was also affected by zero COVID. Like almost 3 years where global executives couldn't visit China and see China on the ground, what's happening there. Now, the good thing is that over the past months, I've seen more global CEOs and global executives going to China, visiting their offices and seeing what's happening on the ground. And that has, in a way, been very helpful in terms of, aligning the expectations of what the market can bring. And all of the CEOs I talk to, here's the other thing, none of them are looking to exit China.
No.
they're actually all of them telling me, okay, we want to defend our China market share. At the same time, however, a lot of them, and we saw some of those insights from the survey right now. 71% of CEOs right now are looking to localize more as a way to de-risk.
Yeah.
Right? But over half of them think that in the next 2 years, they're going to diversify part of their supply chains from China to India, and close to 50% is going to be from China to Southeast Asia.
Yeah.
So they are also trying to diversify to strengthen resilience.
Yeah.
So it's so again, I mean, recalibration, rethinking of how to compete, alignment, and I guess one thing that I advise a lot of these companies is, as you recalibrate your strategy, you really need to go back and think about what your core competencies are.
Yeah.
These are the ones that brought you to the position that you are in, and these are the ones that you need to strengthen further.
Yeah.
Right, in order for you to defend that market share that cost you so much investment in terms of time and capital to build.
Yeah. I mean, there's a positive here in all of this. Yes, the market is a lot tougher in China. There's much more competition, but it's also an opportunity to innovate, right? You know, you have to be the best. You have to beat what's out there, but you can take those learnings from the China market and share those learnings with the rest of the global operation or the global organization. So it forces companies to be more agile, to be more nimble. And I think that's something that really needs to be, kept front of mind. We're going to take a short break, and please note that you can access the results of the CEO confidence surveys on our website. When we come back, we'll continue this discussion on the results of the CEO confidence survey and what they mean for business in Europe and China.
Need a practical approach to leading AI projects? Want insights from what other companies are doing? Team up with peers from Europe's leading companies in the Conference Board's AI Forum. We are collaborating to put the power of AI at the heart of business innovation. Discuss how to use AI for business growth, learn from other success and failures, and discover how to embed generative AI into existing digital initiatives. Join me, Claudio Truzzi, for a hands-on approach to mastering the AI revolution.
Hello and welcome back to this conversation with Dino and Alfredo. We're talking about the 2024 first 6 months of the year CEO confidence survey and the impact on business priorities. I want to turn the discussion now to get some perspectives on regional differences. Dino, let's start with you. So according to the results of the survey, a staggering 91% of CEOs in Europe see improving and simplifying the EU regulatory environment as the best action to restore European competitiveness. How do you think this issue will be addressed, especially in light of the EU elections?
Well, I believe that the EU elections will largely determine how such policy efforts will evolve, and of course the impact they will have on the EU's economy and, of course, its efforts for competitiveness revival. So, for example, in my view, the European Parliament with more Euroscepticism would inevitably create more hurdles for a more united Europe, and this would in turn have negative implications on a series of policy efforts and initiatives, including, of course, what you just mentioned, Sarah, efforts about simplifying and improving regulations, which, as the CEOs in our survey said, is the number one priority the new EU leadership should have in order to revitalize European competitiveness. So, all things considered, I think that to take stronger actions on that front and actions that will create a more robust and simple and coherent regulatory framework, this is more likely to be achieved if after the elections, the day after elections, they find not a Europe that is more fragmented, but instead a Europe that remains united on key policy issues and, of course, on its long-term objectives, in order, to very fast regain the lost ground and, of course, to reposition the European economy as a whole in the world. That would be my take.
So it's really interesting because time and time again, CEOs tell us, how important this is, right? This is not a new thing about better regulation, but how urgent it is to ensure the prosperity of Europe, to ensure that Europe remains globally relevant. I think the key question is, depending on the elections, will the European Parliament have the appetite? Will they, can and will they actually do anything? Will Europe change?
Exactly, because if you think a Europe where you have more populist voices, then this automatically means a Europe of many more debates and Europe of many more conflicts and friction points. So what you need instead a Europe that is much more unified, unchanged on its main objectives, long-term objectives, and prioritizes things as you said, as the CEOs highlight things like improving regulation and the single market and so on.
Yeah, indeed. The other thing that really came out was CEOs are concerned about Europe's lack of defence preparedness. Only 4% of CEOs were very confident. I mean, the majority were not confident at all that the EU leadership is doing what they should. Do you think investing in defence is a partial solution to re-energising Europe's industrial base?
Yes, I think this is very very true. Let me give you an example. So the recently launched EU's defence technological and industrial base. So what this is a strategy that basically focuses on improving Europe's defence mechanisms, not only for the purpose of improving defence itself, but also for economic reasons. So the idea here is that those kind of policies will not only decrease weapons imports to Europe, but they will also create those circumstances to increase ammunition production and to also increase collaborative defence procurement within the continent. But of course, to successfully achieve those kind of policy initiatives, what you really need to ramp up your manufacturing capacity.
Yeah.
So this is why it's safe to assume that such policy initiatives would definitely have positive spillover effects to the European manufacturing sector.
Yeah, indeed. Any other findings that you'd like to highlight, Dino?
Well, I think, for me, the most important thing is, again, to focus on, what actions to do in order to revitalize European competitiveness, especially given we have elections right around the corner, right? So, yes, regulation is something very, very important, but this is one part of the story. Deepening the single market integration, promoting innovation and technological leadership, taking strong actions to achieve our green objectives and to achieve digital transformation.
Yeah.
All these things that our CEOs in the survey highlight emphatically should also be the new EU leadership's top priorities in order to bring Europe back on the spotlight of economic coherence and revival. Basically.
Yeah, indeed. And urgency is key. Alfredo, let's turn to China. So we asked CEOs where they think the China market will be 5 years from now. Can you talk a bit about the results?
Right. So I think the CEOs we could see in this CEO survey, they have very optimistic views about where the market is going and the potential, right? So we could see that there is still a majority of CEOs that believe that China's future demand 5 years from now will either be the same as other major economies or the standout globally on average. Mm-hmm. So there is still potential in terms of the demand that the market generates, which is really not surprising because we are talking about a country of 1.4 billion people, out of which 890 million are economically active, right? So despite the current softening of demand and consumption downgrading that we are seeing, despite the fact that a large proportion of them are actually lower income, there is still great potential for continued consumption, right? And actually just this morning, I was talking with a CEO of a consumer-facing company, and he was telling me that, things are actually gradually improving. So we are seeing improvements.
But getting the domestic consumer market in China up, and really having that as a source of growth. I mean, that's always been the issue, right? So the potential of the 890 million people in the population, it's always there. But, aren't there a lot of measures that need to be taken so that the Chinese consumers got more cash to spend in the first place?
You are absolutely right. Let's just say that Asia traditionally saves more of their money than Western countries.
Yeah.
In Asia, China is the one, I think, that saves the most.
Yeah.
And in China, they save because they are saving for a rainy day. So let's put it in economical terms. They are saving because of precautionary reasons.
Yeah.
Right. Now, this is something that I always say in my briefings to our CEOs, which is like, well, you want to improve confidence levels and therefore consumption in China, it's very easy. You have to reduce the need of precautionary reasons. Very easy to be said, very difficult to achieve, because what this means is that China needs to strengthen its social safety net.
Yeah.
It needs to address the lack of financing, for instance, in their pension system. They need to further improve the access, affordability, availability of public services such as healthcare, education, right? Now, this needs to happen, again, in a country of 1.4 billion people.
Yeah.
So it's not that China is not, or that the government is not trying to do that. No, they've been trying to pilot some changes in order to achieve this.
But again, the implications of multinationals operating in China is watch the policy changes, because if there is changes in social security, higher taxes, higher pension contributions that multinationals have to pay, that's going to impact their operations as well.
The government, I think, understands these considerations, and they do provide some preferential policies for taxes. For example, I, as a foreign employee working in China, do have some preferential policy in terms of how much tax I pay. So the same happens with companies also, right? And so far, the one thing that is really impacting all of this is that currently I see competing priorities in China. So on the one hand, short term, they need to contribute to growth, push growth, address those structural reforms. But there is another competing priority, which is they need to build self-reliance, they need to increase their national security. And so all of these competing priorities at this time mean that they're actually investing a lot or focusing a lot on strategic sectors rather than on what are the reforms that are needed to unlock demand and consumption.
Let me ask you both one final question. What's the key takeaway from this report for CEOs in Europe and China, Alfredo?
So for CEOs in China, but also for CEOs in Europe, and I would say CEOs around the world, is that the conditions are improving. Yes, slowly, but they are improving. MNCs have the capacity to continue winning in the China market, and it will depend on remaining competitive, on remaining relevant, but that needs investment.
Yeah.
That needs alignment, and that needs an understanding that companies cannot just have a hold and grow or wait and see approach in this fastly changing market.
Thank you. And Dino?
Yeah, from Europe's perspective, I think the message is very clear. Confidence, I agree with Alfredo, what we see is keeps improving. But CEOs in Europe give a very clear message that, yes, confidence improves, but mostly because of business prospects outside Europe improving rather than inside. And this is the third or even fourth round of the survey where what the next EU leadership needs to prioritize is improving regulations in order to promote investments, in order to promote technological innovation, R&D, and so on, because this will in the end help businesses grow and help business leaders, European business leaders, regain some of the lost ground from the last 2 decades.
So I think all in all, just to kind of summarize, yes, confidence has improved. It's better, but it's not great. There's still some significant challenges ahead. On the Europe perspective, is Europe able to change? Better regulation, coherent regulation, improve the competitiveness. There's a long list of friction points, whether you're on the EU side or whether you're on the China side. But, China are much more optimistic about that relationship than China are. But indeed, as you said, Alfredo, they're on the front lines. They've got to keep competing. It's getting harder and harder. Alignment with HQ is key. And there's still a lot of symbiosis between China and Europe. Yes, the geopolitics are harder, but it's not something that either can just walk away from. It's going to be a relationship with some challenges, but ones that need to be worked through. And again, defence readiness in Europe calls for serious concern. So, I certainly think on the Europe side, EU policymakers have got some significant challenges ahead of them. As you also say, Alfredo, China are already thinking about the reforms that they need, and they're underway. But this is a long road ahead of us, and one that's going to be really interesting to watch. I would like to thank you so much for the wonderful insights that you've shared with us today. This brings us to the end of the episode of Let's Talk Global Business. We'll be back next time with a focus on a new topic. You can find the results of the survey and listen to the entire catalogue of podcast programming from the Conference Board by visiting our website, conference-board.org. Thank you, Dino and Alfredo, for sharing your insights. Until next time.
Thank you very much, Sara.